Right, guys, another fantastic week of trading. Going through the backtesting of this past week, which has just happened, I got in on the monster trade in real life as well, and it was pinpoint accuracy from entry to exit. And I'll prove it twice with the strategy. If you want to learn to trade like me, literally just join us in the group below, link below, and enjoy the video. Right, guys, welcome back. So today we're going to go through the previous week of backtesting. So I took a series of trades this week. I took an absolute monster, which I was pleased to call out in the group, and it was absolute pinpoint accuracy from the moment of entry to the exit as well, which is brilliant. A couple of other wins for me as well, and a series of losses, but I'm going to go through everything on this video. If you're new to this channel, I'm just going to go through the strategy for you. It's really, really simple. We trade essentially zone to zone, all right? So by that, I mean that we target areas of liquidity and supply and demand, because that's literally just what the market does, all right? So just imagine these blue boxes being H4 zones, and this is going to be the representation of the M15. Essentially, when price reaches a zone, let's say one in the middle, it is going to go to this one or it's going to go to this one. You know, there's no doubt about it. It could go, sideways for ages, but it is going to reach one before it reaches the other. Now, to get a better risk reward ratio than a 1 to 2 or a 1 to 3, all what we do is we take our entries on a lower time frame because we know it's going to go from this one to that one or this one to that one. Sometimes it can go to this one, then a bit up and then down or whatever. But generally speaking, it goes from zone to zone. Now, the way to get an entry, there's only two entry models that we follow. There's a continuation and there's a reversal. So the continuation moves down, pulls back a little bit and breaks down again. So we get a break of structure. Okay, so we call it boss. And then the next one is the reversal, which is essentially, it does the same as a continuation, but instead of it pulling back and then going down again, what it does is it pulls back and it breaks away from the previous, in this instance, high, comes down, tests hopefully a deeper order block or supply and demand area, and then works its way up again. Okay, so in order for us to get the entries that we want to see that price action happen primarily within an H4 zone. And if we don't have it happen within an H4 zone, we just trade cautiously, right? So in this instance, price is working its way down, we get a little bit of a pullback, and then we get a break. Ideally, we want this break to be a body break of the H4. If we can't get that, a body break of the M15 is fine as well. We want to see a pullback into a deeper area, and then our target is going to be down here. Of course, price is going to do its own thing in the middle until it reaches this area, but once it reaches this area, we can take our profits. We can get involved in these other trades as well, but as soon as we get chock within the middle of a range, we start targeting just the recent low in this instance of the M15. So once we get down to here, we're going to pretend that price creates the first sign of a potential boss, but we're going to break the structure and come back in on ourselves, get involved with a lower order block and work our way out to the next area. And that is it. It's literally as simple as that. There's multiple confluences which we use, but that's absolutely fine. Generally speaking, it is probably the most solid strategy out there. And I created it, so I'm sharing it with you guys. Now we're going to go back to the start of the week. Just going to squish up the chart so we can't really see anything. I remember most of it anyway, and it doesn't matter because we're just back testing the data, so we're following the rules of the strategy. So it doesn't matter what I remember and what I don't remember, as long as we're sticking to the rules of a back test. So this is where the market reached last week. I want to say yes, it has. So let's first of all start off with doing our top-down analysis. All right, so top-down analysis is absolutely key because you want to know what direction you should be trading in. Because we follow mostly the H4, we're taking our entries on the M15 so we can get a better risk-reward ratio. Therefore, we want to know what direction the H4 is going in. So we're going to mark out. By the way, if you can hear my breathing, it's because I had a bit of an asthma attack or an asthma issue this week. So, it's harder for me to breathe than usual. But, we're basically using boss and chock as a directional bias. It is not the sole purpose of this strategy, but it just helps us with picking the direction of the market with statistical information, which we've got. So we know that if we get boss into boss, we know what percentage chance is that it's going to be boss again. For example, we know if it's going to be a wick break or a body break, what percentage chance we're going to get of changing direction or continuing again. So it gives us confidence in our strategy. And obviously on the higher timeframes, we are targeting zones of liquidity. So what we do is, because we're technically starting off at the start of the month, we're going to go check the month. Okay, so we just want to see the zones. Where are we? Okay, so we've got an order block all the way up here with a little bit of imbalance below. Therefore, the monthly at some point should come up to here and at least mitigate it. We should rebalance with that very last push up candle. Okay, at some point, might be a year away. And then down here, we've got an inside bar, which isn't fantastic, but we have that as a incentive to come down to, because we've got nothing but an imbalance down here. All right, so that's how that works. But I don't have one of these drawn on for the monthly because it would just clog up my charts with the wrong colors. Okay, so let's go to the weekly, and this is where we do start our drawing effectively. We've got a weekly order block right at the top. We have a weekly demand zone in the middle, and that's all what it is. It's just the middle of a push up. But let's look at the actual structure. Okay, so we need to try and figure out what direction the weekly is going in. Now, this tells a bit of a story, and I always do a call on a Sunday night, so pre-market open with my group at FTR, link below by the way. And I work out effectively where the order blocks are, so where we should be setting our pending orders if there is an opportunity to do so. But I explain what's happening in the market. So if we follow the structure, what's happened is that we had this massive drop off, then we had a push up. We reached about halfway on this drop off. Okay, so it's actually further than that. We started to pull back, pushed up a little bit with wicks, pulled back, pushed up again. Mitigated into something around here. It's not so clear on the weekly, but we mitigated something, pulled back for about 2 months, 2 or 3 months it felt like. We got our chock, which was, yep, it was right there. So we got chock again, not too convincing because of these wicks, and we've worked our way up to about the halfway point of this leg. All right, so we're about halfway of that leg, which again is a strong reversal point when you get to know what price action is. Okay, so we've reacted essentially from this pullback. I know it's a black candle, but it's still an order block. There's blocked orders because it is literally a pullback. There's an apex there. Okay, so we've grabbed something from within there, and price has rejected with a huge wick, and it worked its way down, and it ended up breaking lower than the previous week's low. Okay, so even though we closed higher than the previous week's low, we broke below it. So this is an outside bar. It's an extremely powerful reversal candle when you are mitigating something of value. Okay, so we've mitigated a point of interest there. Therefore, the weekly looks as though it is probably going to reverse to at least here before we could possibly gain momentum and work our way up to here. Or we do something around here and then work our way down to the next weekly zone, which is likely going to be this one, which has been since, I believe that we've just mitigated it. Not mitigated, rebalanced it. There's a slight difference between the two, which I'll probably explain in the video as we go on. Okay, so that's the weekly. We've decided that the weekly is going down. All right, so I'm just going to draw an anchored text. This helps with just during the week, you know, if I'm on my phone, I want to be going in the same direction as the trend if I can help it. So when I open my phone, it's just a quick peek. It's like, oh, weekly's down. Okay, cool. Move on to the daily. All right, so are there any daily order blocks that we need to mark out? Okay, so weekly rebalance occurs there. The daily, there is a bit of a tricky one. So it's actually this last candle. Okay, so the last push down is a daily. So daily POI, and we could also say, if we want to be very sort of picky on it, we could go with the absolute last candle, even though it's a bullish candle. All right, so daily POI. Working our way up, we've actually got one above us as well, so we can go with the last candle on that. And we've got everything else marked out effectively. So we've got nothing but imbalance down here. So the theory at the start of the week was wicks, you always run into wicks, all right? So if you can, run into a wick, especially if it's not bounced off a point of interest. Why? Because it clears the way. It's hard to explain, but it's essentially just clearing out liquidity ready for a drop off. However, we weren't sure at this moment in time whether or not we had just swept this and mitigated this for a chance to push up. But what were we really reacting from? It would have to be something from within here. And we have since effectively, you could say this is a chop down. Is it a chock or is it a sweep? Not sure, but there's a hell of an incentive to get involved down here because there's nothing but free movement down here. All right, so an imbalance in my eyes is just a lack of orders, which means that price should technically on this time frame or the higher time frame look as though it's just shot straight through without any issues, and that usually happens. Same thing happens with curved liquidity. So down here, price should shoot straight through. Price should charge straight through this as well, where it's all been mitigated. I'll try and find another instance of it up here. Price should shoot through those wicks. Here we go, a bit of curved liquidity along here. Look at the aggression coming through. It happens over and over, like you can't ignore it. So just a little concept that I made or called curved liquidity because it looks curved. Even though it's not actually curved, everything's horizontal, but call it curved liquidity. So the daily's marked up, and we want to know as well, what direction are we going with the daily? Now we can go with standard boss and chock, which is really helpful. So let's look at what's happened most recently. We've got a breaker structure pushing up, therefore our chock would be here. So we have chocked, but we've chocked with a wick. All right, so let's just get our daily boss and chock on there. So technically speaking, this is daily chock now, and daily boss is now down here. Right, so daily boss. And sometimes I will draw on, I don't do it often anymore, but the guys in the group will. H4, not H4, but daily. So daily chock, and I would put in with a wick. Because we've got the stats on what our chances are of it continuing in that direction with a wick or a body. Okay, so I don't use these lines anymore on my charts. They just clutter my screen and they're a bit of a nuisance, but I just do it for demonstration purposes. And you'll see as the video goes on that I do forget to move them as well. So I do apologize, but you should be able to keep up with effectively the pending orders on the screen. Okay, so weekly down, daily down. Okay, so daily going down as well. Let's drop down to the H4. Now, up here is a very weak H4. It's basically just a point of interest, okay? We'd want the market to rebalance. It hasn't yet. It's not particularly strong, multiple reasons, but looking at everything above it, this didn't do anything. It didn't really sweep anything apart from that little tiny candle. Next H4, that's already been mitigated. Working our way down, we've got probably a reaction point off of here. Was that a daily as well? No, it was just an H4, so probably going to get a reaction on the M15, but that's all what it would be, a reaction. So we got the H4, again, I clicked the wrong one. I'm just going to call it H4 reaction point. And then we've got all of these down here. This has been rebalanced with the probable red news event. This will be mitigated, and nothing looks good until we get down to at least here, which doesn't look great either. H4 technically chocked. Well, if we were unsure with what was going on up there, which I was at the time, we've definitely chocked now, even though it may just be with a wick break. So, H4 now, also H4 boss is down here. And H4 chock is just here. Now, for the market to reverse, what we're expecting to see is price to go up above here, get a change of character, come down, grab liquidity from something, and then continue our way up. So we're always going to assume break of structure, break of structure, break of structure. Why? Because it's about a 65% chance that you're going to continue breaking structure rather than turn back on yourself past the lowest point between the break of structure and the previous high or low. Okay, I hope that makes a bit of sense. So I'm just going to mark on here H4 down. All right, so H4 down, and then we're going to go to the M15. And was this the start? Yeah, so that was the start of the week. I can now mark on where the order blocks are. Okay, so we're looking for either incentive for price to come into, we're looking for imbalance, we're looking for sweeps. There's multiple things that make an order block an order block, all right? So I had these marked up literally at the start of the week call, and I had this marked up. I think I had it marked up from Friday, which didn't get tagged. And then I also had this one marked up, which is what I call a 50-50, all right? So it's just, it's the extreme. It should possibly be taken. There is an imbalance. There was potentially it was a sweep of this area. It may have been a mitigation of price action way back here. It's a 50-50. It's got half the confluences for, half the confluences against. And I placed this trade. Just so you're aware, I placed this on my live charts. So I placed that going long, even though it's against the run of play. But at some point, the market does have to reverse on itself, but it's not wise, really, is it, to go against the market, even though I do it on such a regular basis. Now, I also placed this one, and I explained all my reasons within the group. I record all of those sessions and keep them private within the group, but I had a plethora of reasons as to why. Okay, so I'll talk you through them generally here. We had a sell-off on the Friday. We had the price come back up. We rebalanced this area, but this being an inside bar is typically very strong. Okay, so the inside bar is very strong. We'd rebalanced, but we hadn't mitigated. We hadn't got within 25% of the area. Price then came down right towards the end of the day and slowly started to recover. Now, I call this an incentive, okay? It's an incentive for the market to come up and sweep the highs of those basically equal highs. There's now liquidity resting above it, with the inside bar indicating that there are trapped orders or an order block. The order can be placed literally directly off the top of the inside bar. However, just to play it safe, I didn't. I said, I'm going to cover the high of that wick, which was also a mitigation of the previous inside bar before the previous break. Okay, so just trying to follow suit, but you could very well have just done this, as we will find out. Again, price did not tap into it, but lesson learnt. I could have turned my 20 odd R trade, or 20-ish R trade, into probably a 30. But bit of a preview. I took this trade. So we placed this trade right at the start of market open, but obviously spread hours. So I told everybody to take their trade off and then replace it at about 11:05. Okay, so in the evening, Sunday evening. Now I know that my stop loss was 7.1, so I literally just covered the high of this. Okay, so it was that instead of doing the 0.5 as per usual, because I knew this was an inside bar, I just wanted to cover this area, and that's absolutely fine. But generally speaking, I would add 0.5 pips because that is pretty much what is needed for FTMO accounts because their spreads are so crap. But anyway, the first target is always going to be here. Okay, it's always going to be the higher time frame boss or chock, or the same time frame swing structure. But because below here there's literally nothing stopping us from dropping to the next level, which isn't that. I think it's this. Why is that not marked on there? Let me just go back to a different time frame. So it's marked on it's because I've got the weekly hidden on the 15 minute. So I'm just going to put that in as the weekly. All right, so because there's nothing stopping us getting down to there first, and then nothing stopping us getting down to here, and then down to the next one and next one, it doesn't make any sense to me to take my profits off here. Now, you could take off 50% if you trade, you could take off 20% or whatever if you want to, but immediately I told everybody our target is the weekly. Why? Because the H4 and the daily are both down as well, and the weekly is down. We've got that imbalance to fill on the weekly before we do anything else, okay? So the daily and the H4 are most likely going to be further than the weekly, as shown here. We've got the daily there, we've got the H4 here. Oh, that's a daily as well. So 2 dailies and an H4. We're probably going to have reaction points off of all of them, but we need to clear the weekly first. So the target is the weekly, and there you go, it's a 20R trade. So There's also going to be a potential reaction off of here, probably just on the 15 minutes. Why? Because it's a 15-minute order block, all right? So this was a red news candle, can't remember what the news event was. Inflation, okay? So inflation, people sold off. So the guys going long were selling off some of their trades before, you know, slowly exiting as price was going up as well. So that's just an order block. It should cause a reaction, nothing much more than that. But let's see what happened, okay? So market opened and we got a bit of a push down and then a slow working up. Now, up until 11 o'clock, so up until the end of that candle, nobody's orders were placed. And I said, okay, you can replace your orders once about 5 past 11 kicked in. So spreads would normalize. Okay, so I wasn't in at this moment in time. I had to wait until a pending order was tapped. So I wasn't in right there. I got in on the very next candle. Okay, so right there, I got in. So I actually entered there and my target, and I said to everybody, I'm holding this for the rest of the week. So if you watched the previous video where I was backtesting the previous week, I was really frustrated with my own behavior in the market. You know, I just made a series of mistakes. I bottled it with a few trades and I just thought, you know what, like at the end of the day, why am I trying to compete with the market when if all what I do is stick to the strategy, I'm gonna win week in, week out. We've only had one unprofitable week in 2022, so a year ago now, and that was literally the final week of the year, which none of the traders were trading. We got -2. For the rest of the year, we were profitable every single week. I think it's been the same with this year as well. So, you know, find me a better strategy. Doubt you can get one. And that's not me being cocky. It's these percentages are insane. Just stick to the plan. Of course, you know, you can use price action and you can use your trading knowledge and stuff, which is what I do during the week as well. But it's not necessary, you don't have to. But obviously price action is going to be really quite key to the majority of things. So the more you learn, the more you experiment with the charts, the more you forward test and back test, the better your knowledge is going to get. Anyway, so price started selling off quite nicely immediately. So I was up, you know, 4 or 5 hours within like an hour. And then I just pretty much, I think I just went off to sleep. There was another trade entry possibility here, which I think I don't know if I took this or not, but there was a potential trade entry. The drawback with this though is that this is technically, even though it's kind of a pullback, it's a black candle as well. So if I turn off the inside bar, it's also just a black candle. So, you know, it's a 50-50, oh, not volume. It's a 50-50. You don't really have to take it if you don't want to, but it's usually a good reversal point if you want to take one. So we'll mark this on the chart anyway. I can't remember if I took it or not. A lot of people talk about the spreads being, not the spreads, the stop losses being too small. I just say learn to trade. You know, you'll see the strategy works extremely well and it works fine on any account. I've never known anybody to get stopped out as long as you use the correct entry methods. So here we go. We get stopped out of that first, the first stop out of the week. Okay, let's say. So we get -1 there. And then we will just continue. Did we leave one behind? Kind of. It's not the best, but there's another possible entry to get short right there. So let's just mark that up on the chart as well. It's been rebalanced, it hasn't been mitigated. I'm going to get rid of all the lines on the chart though, because that's what clogs up all the picture. There's this, and we will target here because we've already, well, I'd already committed to going straight towards the weekly. Okay, because if I target the weekly with everything, it's going to end up with +100 or something like that. So, you know, just for the sake of people seeing it and thinking, oh, that's rubbish, and don't watch the video. You know, let's be realistic. If you've committed to one, like I have, you can take shorter profits with the other ones. Okay, but generally speaking, just follow the plan. But the first target really is always going to be the nearest one. And that's where you can decide what to do. what time are we at? 8:45 in the morning. So we had essentially we had a bit of a sweep just before the start of London. And now I always say, like, don't sweat it so much. Like, I used to be a London breakout trader, and you know, we've left everything behind. We've left behind imbalance, which is the incentive to get into here. But what have we mitigated with this? Nothing really. You know, we're in the middle of nowhere. There's no reason to take this. We'd be going counter trend against everything, including the M15. So there's no order placed off of this. No, I was going to say there's potentially a trade off of this, but yeah, there was actually, because I took it. I'm pretty sure that I took it. Anyway, there's a trade right there to take. And don't worry about me missing them and sticking them on the hindsight, because you know, if you're following the strategy, it's generally fine, because when you're trading live, you've got 15 minutes between every candle, not a fraction of a second when you're clicking through. So, you know, first target could literally be that nearest swing. This one won't do it because it's not a good enough risk reward ratio. We want 1 to 4 if possible. So you can target there, which is what I did. So I only took a little bit out of the market. I think it was this one anyway. I want to say it's this one, but I only took a little bit out. It was about 4%. So you could target there or you could target here. But let's go. Well, actually, the extreme was that, the extremes moved, so it makes sense to go for here. There's nothing left behind, so, although, yeah, that's what our target will be. And if we get a break of this, like, even though again, it's just more kind of internal, we could try and get in that last candle right there as well. So we'll see what happens. We don't get the chance. Oh, that's a shame. But anyway, we got the break anyway. We're working our way down, and it's left behind again. Another one. This was literally a week which just kept on giving. Throughout the whole week, it just kept on giving and giving and giving. And it's just a case of, could you keep track of the orders? Now, at one point, I think I had 2 trades open and 7 pending orders. All right, so you know, it was quite difficult to keep track of. I accidentally moved my take profit as well, which was really annoying. But you know, these things happen. I was at a Masons event and we had our Christmas party, so I was a little bit tipsy and went on my phone to check the trade, literally nudged it with my thumb, didn't even notice, and yeah, I'll tell you about it in a minute. So anyway, so we got a win there and no entry on this one, so I'll slide this one over just so we remember it. Don't know if price comes back to it. I don't think that it does. But we can just slide that over, and we've got we've got 1 win and 1 which we're holding. All right, so because this area is gone now, okay, because this area has broken through and it's convincing with a body break, our next target has really got to be the weekly. We've obviously got that little reaction point, but that's all what it would ever be. Okay, it's just a little reaction point between imbalances. Okay, so it will be a reaction, little ping back, fine, maybe a chance to get involved in another order block, but we also have this one to go with. Oh yeah, so we've already got that kind of drawn out right there, and we've got that one running. And this one, you know, the 50-50 we lost. All right, so I took that as well and I lost the trade. Perfectly fine, it's all right. It's counter trend to everything, but with it being the extreme, with all the other recipes, okay, the imbalance, the sweep, the mitigation of that zone, it was kind of like a 50-50, so it was worth taking, just in case price went up, because you know, it's a 1 to 10 at the end of the day, and we'd have been out in 1 to 3 trades if we'd have done that. 4 trades, so plus 6.5 if we were right with that. Obviously we're up 6.5 anyway, having lost that, so well, 5.5 because we got a loss there too, but you see what I mean, okay? So it's fine taking them. It's one of those strategies where you can have a negative win rate but have a fantastic risk reward ratio, you know, within reason. So immediately what we're left behind with is another order block. Yes, it's being rebalanced, but it's not being mitigated, so don't sweat it. And that's the reaction point, 3.95. So you could take your profit there, or you could take your profit at the weekly, which is also absolutely fine. If we get tagged in. Which we don't. Or do we? Yes. What time is it? 8:45, 9 o'clock. I'd be telling people to be careful and possibly just close out the trade because 10 o'clock is spread hours. Okay, so I would say no entry at this moment in time. After 8 o'clock in the evenings, I just cancel my orders temporarily and replace them at about 11 o'clock. So there you go, that would be the start of spread hours. Yeah, it is, 10 o'clock. No entry yet. Still no entry. Okay, possibly re-enter if you want to. And out. Okay, so we'll do -1 on that, which is absolutely fine. And we'll wait for price to possibly come up into here. I will check the H4 in a second. I'll check the H4 now. Oops, not there. I didn't look. Literally didn't look. That was too fast. So, okay, so H4. Oops. We've left behind an inside bar, but that was a bearish, that was a black candle. Not strong at all. There's nothing saying that it should stop the market. We've had that big wick. Then an inside bar, not interested really in anything on the H4. But if we were to go long, we would try to take profits just to rebalance this H4 if we haven't already. But yeah, nothing fantastic. So again, we're still looking for shorts, okay? Really simple. And we start dropping off. All right, so if we get a break of this, like I wouldn't even say wait for a break of that. There's an order block up there which you could take if you want to. All right, so there's this. You could go last candle, or you could go from the actual rebalance of the last candle in the whole area. I'm just looking for the high. That's the high. And we can try to get short off of here if we get the opportunity. And then target down here, maybe here actually, because we're getting close to that reaction point. That's an 8.6, and then you got this 17.3. So realistically, this is your target because we're going to be reaching the next higher time frame first anyway. So there we go. You get kind of like a double bottom, which I know a lot of traders say, oh, okay, yeah, you should trade away from that, which is absolute nonsense because all what you're doing is you're building up liquidity underneath these. And if we look at the overall structure, we've technically chopped down on the 15 minutes, like we chopped down right here. In a matter of fact, like the H4 was here. Oh, that reminds me, I need to move these. I need to move the H4 Boston Chock. Let me see what time it is. It's 8. Let me go back a tiny bit and I'll just adjust things and I'll show you what I mean with this. All right, so we got H4 Boss down to there. Let me flick to the H4. H4 Boss was there, and technically speaking, have we had a pullback with an apex? Yeah, to there. So that would be H4 Chock at the moment. So H4 Chock moves ever so slightly just to there. All right, so yeah, that's good enough. And then we worked our way to that double bottom, didn't we? Yep, so double bottom formed, and all what it's saying to me pretty much is we've got liquidity down here. We've got that H4 reaction point, which, this isn't quite it, but it feels like there's the incentive to get us down to there to possibly get a buy-in, maybe, if the market was to turn. But we've still got the incentives to go up to here because there's huge imbalances. There's imbalances here. There's plenty of opportunities for us. But I was very quick this week to place my orders, which was good, so I wasn't missing anything. or wasn't missing much. I think I missed 2 trades. Didn't get tagged in, missed it by a bee's dick, as we say in the group. And we have left behind, again, another mini order block. It's not an inside bar, but it is an incentive for price to come back to, because it is an inside bar. All right, so with this, where we've had no break of that low, we're expecting price to break below here. We've rebalanced this. There is an inside bar. Not an inside bar, sorry. There is a very minor pullback, which has mitigated that inside, sorry. So this one has mitigated the inside bar. That inside bar has mitigated the final candle. If price comes back in again, get in and work our way down, all right? But preferably you want to take your profit at the next swing, because the price is now not breaking the lows. It might be forming chalk to go back up. So you just want to target the swing and get out of the market if you can. So swing, yeah. Yeah, you would set like this. 1, 2, 3, 4, 5. Oops. So far, you would target there. In. Looking good. Looking very good. And through. And that is more like my usual trading, okay? In and out as fast as I can, you know, rather than holding the trades, which I was forcing myself to do. Okay, so I'm a typical scalper. I like to be in and out as fast as I can. So that's not bad, but you could target down here as well if you want to, but just take what you can when it's starting to not break lows and highs. So we've got another, we've got another win. Was that right? Yeah, 4.88. So happy days. And there you go. You could have taken that anyway. See what I mean? You know, it was a decent win. But I took that, but you could have targeted the actual low. But then we get the press down, we get the liquidity taken from here. We get a bit of a bounce off of this H4 area where we were expecting it to happen. All of this, by the way, is called out in FTR, like ahead of time. Like we're fast with it. Like we just call it out quite often hours before it happens. And we know what we're looking for. Like, you know, if you didn't get out the market in the right place, you'd have been stopped out of that. Looks like a Newsweek. Jolts, right. Jolts job opening. So I remember I was in the car driving back. Can't remember where from. But I basically messaged into the group quite quickly and said, can anyone get me the last 3 months average of this news? Because I didn't know it off the top of my head. Because I thought, you know, if it's a big news event, I might want to close this trade out. If it's a small news event, I'll keep that on, but I will decide what to do with this order. Anyway, that one closed out literally just a few minutes before this news event was announced, which was cool. And this one was left on. So we'd left behind an inside bar, not broken the low yet. And there we go, we get the break and we get the reaction. The actual reaction off of that H4 ends up just being an inside bar. And then we get a body break. Okay, so for me, this inside bar was significant. I know it's a black inside bar, but if you think back to support and resistance, okay, bounce, 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 kind of a breakthrough, resting on the line, breakthrough. Okay, this is going to be the candle which signifies a reversal in the market, or potentially does anyway. So perfect inside bar for me. Order goes on. Order goes on pretty much immediately. What time was it? 4:50. Order would have gone on about 4:30, 4:35 that day because of my errands that I have to run. So order would have gone on about there. Okay, so target again, just the weekly. Pretty much, because we can't target a swing low if price came up from there because it's only 2.16. So at the moment, the default has to be the weekly, which is the higher time frame target. Now, bear in mind, I was still holding this 15R. Okay, so it was about 500 quid risk that I put on the trade. So I was up around about 7.5 grand. And, you know, this was only Tuesday. And that to me was just a big bonus. I'd had a couple of stops, like, you know, 1 loss, 2 losses, 3 losses. So technically I was down 1,500 for the week, but on equity, I was doing really well. Okay, so I was up like 6-ish on equity. But I had just had, you know, 3 losses in a row. Oh, and I also had that as well. So technically speaking, I was up, but I felt the losses of that because I felt like I didn't need to take these losses, but it's all just part of the strategy. So, you know, it was all looking good. Let's continue. Now, there's nothing really there, even though it's a pullback. Look at how jagged it is. It's like, you know, it's left behind that imbalance. This is still the move to take. What time is it? 8:30. Yeah, so a bit risky. Getting into no man's land, you know, 9:15. You want to be thinking of closing out, or, you know, not closing out, but getting this trade off. So you would take your trade off now, definitely. You know, it's 9:45, 9:30, 9:45. Is that 10 o'clock? That looks like a 10 o'clock candle. Anyway, you'd be out the market. You wouldn't be placing that, sorry. I'm going to flick over for daily because it's not going to reveal anything, but it will show us what happened so far on a daily. So we had, you know, kind of like the weak break of that structure because price closed back within the overall range of the previous day. We then broke below that, which is really good. And it looks like we are working our way down towards the weekly, which I can't press on because it will reveal what had happened. All right, so over to the H4, we're breaking down with a little bit more conviction. We've got that inside bar, doesn't look great. Look at that wick, not superb, but we are still breaking down. And look at the size of the candle, which we just broke down with. That's great. And this is just the after hours candle, so you can almost ignore it, the strength of it anyway, or the size. Okay, so let's keep on clicking through. Oh yeah, you would have replaced your order by now. Now, you've rebalanced this area, you've left behind an order block, but let's look at this. The break has happened. Is that even a break? Low of 7778, 7781. So we got a sweep effectively. You wouldn't be confident taking this, especially as we still have this one to go. So if you were ballsy, you would try and take this as an order block. If you were conservative or smart, you wouldn't. Okay, so you leave it. There we go, price goes off without us anyway, it looks. So we're heading down towards our target, which is pretty sound. Has price left anything behind for us? Possibly this candle here, but we have rebalanced. I'm going to say yes, this would be a trade that I would take. Why? We've got the breaker structure, clear pullback. You know, if we work our way up, probably go past that and into there. So no problem taking this trade whatsoever. I think I did in real life as well. In real life. Sounds like I'm playing a computer game. Pretty much are. But because there's ones left behind, you want to be conservative, thinking, do I want to take the swing? Yes. Or you can just target the actual low with these ones as well. But in reality, because there is this yet to go, you know, with the imbalance, it's getting a little bit like, am I just targeting greed or should I target common sense? All right, so anyway, it gets stopped out. So just be wise with your entries. Even though I was up and I was up a lot, you know, I just realized that if I'm taking half-ass trades, all I'm doing is I'm bleeding my edge. Okay, so I'm just chipping away at the equity which I'm gaining. Therefore, this one becomes even more important. So I get emotionally attached for charts, and I shouldn't do. Oh, and look, if you took that one, you'd be tagged in. So, but look at the size of that candle. You just wouldn't want to take that. Oh, look at that. You'd have been in and you'd have stayed in. And you'd have been knocked out immediately. And this one, you know what? I had this place, but I wasn't tagged, but that looks like a tag. But I didn't get tagged. Yeah, that doesn't show that you've been tagged. Literally just missed it. Let's zoom in. But I know, there we go. Yeah, literally just missed it. I didn't get tagged. Don't think anyone else got tagged. Maybe they did in the group, I don't know. But anyway, that's frustrating. And look at that. Frustrating, but that's just what the market does sometimes. Oops, wrong button. And we have left behind an order block which looks pretty sound. So we're going to go with the white candle. We're going to go with the highest one. They're equal highs, so technically it's the first one. Like technically speaking. Order goes on there. 0.5 for spreads. Target. Not actual target. Target. Nope. You might as well go for the low if that's the turning point, if we come in and get it. Look at the way price is recoiling back. Okay, we're now 1 in the morning on Thursday. Okay, so I remember this actually, and it was a bit frustrating. Where was it? Where was it which had happened? And why had this not sort of been announced? So on Wednesday there. Now, I thought that I was going to be taking profit, and so did everybody else. Why is the line right here? I'm going to check my broker feed quickly. Bear with me a second, because I remember everybody thinking that I had taken profit on this beastly trade, because we were sort of like cheering it on during the week. But for some reason, weekly seemed like it's in the wrong place, like it should have been here. But yeah, I don't really remember. I'm sure that I was meant to have taken profit in the morning. Oh, it's Wednesday night. Okay, no, sorry. So I looked at the trade and it was here. Right, okay. So that's where I got it wrong. Okay, so I looked at it. And Wednesday night, you know, fat fingers, just moved it with my thumb, and I'd moved my take profit on that trade, wherever it is, that one, to about here by accident. And I didn't notice. I literally just didn't notice. So, you know, that's what had happened. Highly frustrating. That was Wednesday night, probably about 10:30 or so. And I looked at it and I was like, yeah, this is doing well. I don't have to worry about anything now. And then, yeah, the morning came and we went down and literally did that. We spiked it by like 1 pip. So the accuracy of the target from entry to exit was absolutely spot on, and it was just enough margin as well. You know, it was 1 pip, it was less than 1 pip. That was enough to cover your spreads. So you'd have been literally in and out, tapped in, tapped out, absolutely perfect. But I wasn't, because I was still in the trade. So instead of me banking at that point like 20%, like 19-20%, which was a lot of money, I was still in the trade, and I got out around about, I remember there being a pullback, I got out for about 15R, around about that. And I can't believe that I did it, because everyone was like, yay, like Paul's taking profit, and I hadn't had the alert. I was still in the trade and I couldn't figure it out. And then it took me a few minutes to realize, oh my God, my take profit's down here. How's that happened? And then I remembered I opened up my chart when I was drunk on my phone, and I must have moved it. So really, really frustrating. But anyway, I got out quite quickly on the pullback of this. So, you know, it was only about 2 candles in where I got out. So probably about that. But I ended up, you know, it's been well documented. It's been on Instagram. I think it's actually just in my images, and it's the actual broker screenshot feed from the broker. And yeah, you can take a look at it on there, so it's no problem. It is all documented, and it's all within FTR as well. So, but it was a really good trade, and it looks as though is that the one that we didn't get tagged? Yeah, we didn't get tagged on that. Really frustrating. Or that one. So highly frustrating with that. But we have taken profit with a lot of trades now. So that one we can now put as a tick. So that first really initial trade, really good. And that one we didn't get tagged, do we? I know that I didn't, so yeah, no tag. So 1, 2 winners so far, which isn't 3 winners, sorry. So not particularly great, but 1, 2, 3, 4 losers. All right, so more losers than our winners, but who cares? Because it looks like we're up about, I don't know, 30-ish. So let's keep on going. Hopefully I'll plow through these next couple of days, but I didn't trade much today. But let's just keep going. Let's see what we get out of this. Now we just need to bear in mind that because we've swept, we need to understand that on the lower time frame structure, if we think of the actual structure, we've got like the main structure break there. We've technically got, yeah, that would be our chalk on the 15 minutes. The H4 was also down here at the point. That reminds me, I've got to move this. Let me go back 1 candle. So going back to the H4, I'm just gonna, I can get rid of that reaction now, which is cool. H4 boss has worked its way down to this. And H4 chalk has technically moved all the way down now to here. Now we do have a trade just outside of H4 chalk that we could go for, which is fine as long as we get a close of the H4 below here. Like, therefore it could be a liquidity sweep. So we'd still be aiming for this inside bar, which was like a support and resistance candle, all right? They still work, but it just made so much sense to have this marked up. And then we've also got this one, which was just quite a clear order block left behind with imbalance, mitigation, etc., etc. I did say to people you could try for these candles because I don't think you got the 0.25 mitigation. If you did, you don't take it. Yeah, we didn't get the mitigation, so you know, it's been rebalanced, but that's also valid. But I just chose this. It looks like we didn't get a tag anyway. Oh, there we go. So price came up. Yeah, reacted from the one which I said to everyone you might as well take, but I just took the risk and took this one. So -1 for me. Yeah. Now I'm pretty sure that was a news candle. I'm going to check Forex Factory quickly. Yeah, so that was unemployment claims. All right, so big move. It's a bit like non-farm payroll, but you know, big move. So you would actually close out this trade before it happened. Okay, so you'd go back, you'd check what the average is over the last 3 months or 6 months, and you'd get out. If there's any trades, you know, within 30 pips, you just get out of the trade. So we could actually take that off as not a -1. Even though I had it marked up, I know that I would have removed these trades because I was just on the ball with it this week. So, you know, you could take that off or leave it on. Might as well leave it on just for purpose sake, but you would take it off because you're wise enough to check the red news events, which I hadn't done in recent weeks, annoyingly. So, yeah, so let's just keep on going from there and see what happens. Okay, so price is working its way up. Again, we've left behind a bit of an order block here, which is cool. So it looks as though that price has started to reverse, or the market started to reverse. So there's a potential for a long here. Now, if we go long, where are we going to target? We've just got to target where there's going to be liquidity, right? So we're looking for imbalances. We've got possibly that inside bar. We've got this order up here. It's a bit tricky. All of this looks like liquidity. There's an incentive for price to come back down to this at the very least, at least as things stand. And we've just got chalk on the H4, okay? It means that realistically we could be working up or we could double chalk, okay? There's a decent probability of that happening. Also, what time is it? 6 o'clock. Okay, let me go back one candle because this looks like we've got a body break on the H4 now as well. Yeah, we got a body break. Okay, so chock there, and this H4 thing is that this has been mitigated not just here but also here. There's nothing left in it. Like there's no need for us to place any orders off of this, apart from here, which was a 15-minute order block. So this whole area looked weak, really weak. It's just wicks and it's mitigations, and prices come back up and it's rebalanced off of that inside bar. So there's a lot to consider here. And this was the trade that we didn't get into, but we now did, and we lost. All right, so that is now a loser. And price is working its way back in. So it's clearly working its way down. We want to try to see a chock or a break of structure. This is a nice order block left behind though, to be honest with you, and I'd quite happily take an order off of that, because it looks as though what price has done is come out, swept, done what it needs to do, rebalance with the H4, which was literally there, I think. So it's rebalanced and it looks like it's coming back down, because if we look at the flow of the market, I can't go back to the H4, but if we look at the flow of the market, we're going down. Even though we have had the turn, we have had the bounce off the weekly. So yeah, but anyway, go from the rebalance of this, go to the highest candle of the two. Oh, they're the same. Okay, cool, similar to before. Set our order. Ideally, you want to go to like bare minimum there, which is where you're going to be getting the rebalance and possibly going back up. What time is it anyway? Thursday, end of play. So you wouldn't be placing this order just yet. You'd wait for 2 hours. So let's skip forward 8. 1, 2, 3, 4, 5, 6, 7, 8. You now replace your order. Okay, so that order will be back on if you wanted to. Again, it's a bit risky because we haven't had chock coming back down. We've had internal chock, and following the flow of the market and where everything's going, you might want to get short there and get long here. More like it's better than a 50-50 trade at this moment in time, but you know, we have actually chocked on the H4. But given what it's actually done, it's just rebalanced the previous H4. I would say that Boston chock goes out the window with this instance. So you just got to have a little bit of insight into what happens with regards to liquidity. Okay, and it's one of those things which makes coding this type of system really hard to do. Okay, so making an EA is really difficult. Oh, and we've left behind, it looks like another nice one potentially. We just want to get a bit of a better body break, which we haven't got, so forget it. Oh, there we go, it's telling us that it's undecided. So who cares, it's gone, opportunity's gone. Oh, look at that, another near miss. So story of this week really, just lots and lots of near misses. But anyway. Got another inside bar, but it's been mitigated immediately, so we can't place on that. I never place off of dojis if I can help it, but if I did, we'd now be in. And then I was in this trade, I remember. I actually got into this trade and about 1:15 I punched out of the trade because we had non-farm payrolls at 1:30 this afternoon. So just basically said to everybody, I'll put an alert into Discord, just basically say close all your trades. So anybody who's in, just get out, because it's not worth flipping a coin and blowing your last, I don't know, couple of weeks worth of progress, is it? So anyway, I was in this trade, don't think anything happens now for a while. I remember being up about 1R, maybe 2R, something like that. But when price got to about here, I punched out, and I punched out at exactly 0. Okay, so probably about here, no, a bit further. Up here somewhere, I punched out, it was exactly 0, so it was just a break-even trade. But everybody would definitely be out of the trade now, okay, because non-farm, the next candle, bang. And what's happened? The accuracy of this strategy, it's bounced off the daily, it went down, grabbed liquidity that it needed, it's come back up. What's it going to do next? Well, if you check with an SMC guru, you trade straight away from it. I'm not an SMC guru, you trade into it. All right, simple as that. What's it done? It's left behind an order block. So blocked orders right here. The last push up before basically the start of the news, you know, pre-news orders going in, that's your order block. Your target is going to be a break of the low. 1, 2, 3, 4, 5. You could even target, if you wanted to, next one down there, because if you do get a break of that low, don't think that there's anything really stopping price from working its way down to the next zone. So first target is going to be that really, and then it's going to be that. So let's just do that. Nearly got to it. Oh, actually, we weren't even in it. But yeah, price did it. Right, okay, now we're in it. Looks like we're going to be out. We're not. We've left behind another order block, which is a bit risky. I won't lie, it is a bit risky, but I placed this trade. Two, three, four, five. The target could either be there or it could be down there. And why is this one valid? Like, I got asked in the group, why is this one valid? This one's valid because we got all the clear breaks of structure with that wick, but it was just a wick. But then we had the body impulsiveness sort of working down. Then we came up, we tapped that order block, and then we formed another order block. So, you know, technically we haven't broken this as like even an internal structure, but it's showing all the correct signs that this is also the order block because it's coming, it's mitigated the last order block, okay? These are blocked orders, that white candle. Therefore, it's done it again with this, but it's mitigated. So it's taken everything out of that. Look at how deep in it came. You wouldn't have been tapped out with that either because you make space with the 0.5 for the spreads. So that's why our risk reward ratio is slightly smaller than what it would have been like maybe a year ago on backtesting videos when I was just trading my personal account because, you know, 0 spreads. But anyway, it got round to, I don't know, about 8 o'clock, you know, basically cancelled the order. And then that's that. I think that's the end of the week. There we go. Okay, so pretty decent week. This one would still be running, but yeah, around about 9 o'clock, I'll say to people to close out the trade. So let's just work it to 9 o'clock. Where is 9 o'clock? 9 is that black candle. So yeah, about there, 3.71. Okay, so I'm gonna go around with the calculator and tally things up. That was 0. It wasn't a -1 because obviously the red news event. Did that one enter? Nope, just missed it. So we're just going to take that off because I don't want to include it by accident. I'll take that off because I don't want to include it by accident. 3 losses in a row there. Win, a non-entry, so I'll take that off. This was a non-entry, so I'll remove that. That was a non-entry. So we did miss, well, we didn't miss any trades this week. The market just didn't give it to us. We'll take that one off as well, so it's not confusing us. But I can guarantee you, you know, at the end of the weekend, like if we don't have a ridiculous jump, my immediate trade on the Sunday night is going to be this one. Now, I really don't know where the source of information has come from, where some, you know, quote unquote professional traders say don't trade on a Monday or a Friday. Absolute garbage. I get the majority of my winners are literally on a Monday, so, and on a Friday, because you usually get a Friday sell-off, apart from when you have, you know, non-farm payroll and stuff. So Mondays and Fridays are brilliant. Your turn day is usually a Wednesday. All right, so we're just going to tally this up now. Okay, so 1, 2, 3 winners. So not that many, 3.5. Call it. It doesn't matter. Let's just tally it up. So 35.63 minus 1, 2, 3, 4, 5, 6. So minus 6. All right, so minus 6. 29.63%. All right, not bad. We got twice as many losers as we got winners, therefore a win rate of 33%, which is fairly accurate. But look, it's as far as I know, an unbeatable strategy, and it's really quite simple to trade. And generally speaking, once you learn how to trade this, you don't need to learn how to do pretty much anything else in the future, because it's not time bound, it's not based on certain other things lining up, you know, it's just how the market moves. We've seen it multiple times just on this video. So not as high win rate as previous weeks, but phenomenal. You know, find me another strategy that can get you 30% in a week. Don't know, bet there is one out there, but this is awesome. Anyway, guys, really appreciate it. You know, watch the next video in the feed if you want to learn more. And if you want to trade with me and like the other 100-ish guys in the group, join us at FTR, the link's below. Thank you.